All right, everyone, welcome to the third instalment of Blokes with Beards Talking Business. If you're a regular watcher already, then probably got to ask why, to be honest. But if you just joined, before we dive in, I'll just explain the concept of what we're doing today. It is effectively an Ask Me Anything session. If you've got any questions about running your business, stuff that you've maybe not asked because you thought, I don't want someone running up the clock and charging me a fortune just to ask a dead quick question. Now's the time to do it. So we've got on the panel, fresh in, jetting back from his world tour in America, Alan from Acumenica, the resident accountant and the strongest beard holder by a considerable margin. Mark, from Straight Line Legal, our legal eagle, who doesn't have a top half of his face from the looks of things, but the bottom half's lovely. He's just showing off the beard. And I'm Chris, the financial advisor of the group. So before we dive in, Mark, you are by default the best person to push out our little disclaimer statement to make sure you all know that this is guidance. This is trying to give you a steer in the right direction and help you out, but it's absolutely not advice specific to your circumstances. So don't go acting off what we say.
Yep, I'll just pop that up now, 2 seconds.
Hello, LinkedIn user. Usually I've noticed that people comment on things and when they pop up in the comments, it doesn't always say who it is. So whoever says afternoon chaps, afternoon right back at you. If you are in and you're watching, do say hello, because we are just staring into the abyss. It's nice to know someone's paying attention.
So there's a disclaimer. I'm sure you've had a chance to read it. There's nothing too controversial in there. Obviously, if you've got any questions, let us know.
You sharing that, Mark? I can't see it.
Could you not see it?
No, just your lovely face.
Oh, could you see it, Alan?
No.
This is good. Okay, let's try again.
Nailed it. Something needs turning off and on again somewhere, probably, because that's pretty much all I can contribute to this problem.
How about now? Anything?
Hey.
That was my fault. I forgot to press the share on screen button. Apologies.
How's that then?
Got it now.
Yeah, brilliant.
There you go. Lovely. Right, whilst you're diligently reading all of that, we have got a couple of pre-submitted questions that we're going to talk through, probably quite focused on cash flow this week. So I think we're going to be Alan and Mark heavy, at least in the initial stages. If you've got any other questions, stuff that comes up off the back of anything the guys are talking about or anything that you just want to throw into the comments, chuck it in there and we'll pick them up. All right, if you've done that, what have you got already in the tank then, Alan, if you want to start us off with your little cash flow question?
I don't know whether it's specifically to do with the time of year or the current economic climate or whatever, but we seem to be getting quite a lot of questions regarding cash flow management at the moment. By which I mean no into this group, but into the firm. So we did have one guy who specifically pre-submitted the question. Basically, the question was, what can we do about our cash flow management? How can we improve it? As a service provider, it's difficult to do an awful lot about delaying the payments out. So we kind of focus on getting the payments in. Mark will probably be able to touch on the terms and conditions and how you can tighten those up to make sure that they are paid, or that the payments are ensconced in the terms and conditions. And he'll also, I'm sure, he'll be able to help us in terms of what happens if these terms and conditions are breached. But essentially, you've got three areas that you need to focus on in terms of your cash flow management. It's fairly obvious and it's fairly straightforward, but it's not simple. You've got to focus on getting the money in. You've got to focus on the money that's going out, and you've got to focus on management of that and anticipation of things that are going in and out, basically. So in terms of the money in, I'm very quickly going to run through them. If anybody's got any particular questions on any of them, just pipe up and we'll see what we've got to do. A big thing that a lot of people will try to delay paying you. So you've got to make that a situation that doesn't arise if possible, or just the possibility of that happening. So first thing to do is invoice quickly. So as soon as you can. There's no point delaying 3 weeks, 2 weeks once the service, once you've done what you've done. There's no point delaying it. And be sure that you're invoicing accurately for what you've done and what's agreed at an agreed price. Because if you don't, what will happen is what will potentially happen is your customer will sit on the invoice until it's due date, and then he'll come back to you and say, "Oh, hang on, I've just noticed that this invoice isn't right. You've charged me the wrong amount, or the billing for some other reasons wrong. You need to reissue that," and then that starts the cycle again. So that's going to delay payment. Nobody wants that. You've got to make yourself easy to pay as well. So I've got a terrible cough at the moment. So be easy. Give your clients, customers, any options, whatever options you can to make them pay. So if you want to be paid by credit card, make sure that there's a link to a payment. If you want them to pay by bank transfer, make sure that your bank account details are on the invoice and definitely there. You know, certain things. I mean, I wouldn't be inclined to offer cash payment anymore. It brings its own problems, and I don't know. I mean, it's still a thing. I think I seen a check on somebody's desk in the office, but I mean, I would be inclined not to accept payment. It becomes a bigger problem than it solves, because has anybody got a bank near them that they would be able to take a check to pay? I do know that some of the more modern banks allow you to pay in a check using an app. I take a picture of the check, but I think that's only up to like 500 quid or something. So you maybe want to have a wee look at that. I mean, another thing, again, Mark, maybe you better help us with this one, is it like setting terms appropriately. So making sure that while you might be, a lot of the time when you're desperate for work, you'll accept terms that don't suit you. So you know, you maybe say end of month plus 60 days, for example. So basically you're waiting a quarter of the year before you're paid when the work starts, and what have you, and that's assuming that they're paid on time. So try and get your payment terms kept as low and as short as possible, and where possible. Again, this is something that can crop up that might not be suitable for your supplier, your customer, I beg your pardon. But do try to get some sort of payment up front, especially if your customers look in any way likely not to pay you. So that kind of covers money in, and Mark, I'll come back to you in terms of terms and conditions and any redress if the terms and conditions are breached. But if I can just quickly cover the money out as well. A couple of things that you want to think about doing is you want to keep your money out, especially in the early stages of your business. You want to keep it as lean as possible. So minimise any fixed expenses that you don't need. A bit like what you would do at home in terms of cancelling Netflix if you're not watching it, and the warranty insurance on your fridge that you sold 3 years ago, but you're still paying £7 a month for, but you're frightened to cancel in case it actually belongs to someone that you still need. Just keep your expenses to a minimum, and think about using somebody else's money as well if you've got to pay it. So maybe a charge card like an Amex that will give you an extra 60 days for no real cost, or you might want to finance certain, like if you're looking for, again, here we go, sorry. If you're looking for asset financing or to buy assets, can you finance them over a more manageable period? You don't necessarily want to be financing or buying expensive things that are going to drain the cash early doors. And also anticipate anything that's coming up, VAT, corporation tax, PAYE, things like that. You need to cover those things as well. To be able to do that effectively, you want to have a cash management system in place that can honestly anticipate the runway, if you like, of cash that's coming up. So basically what we're talking about is really a cash flow forecast. And remember to make that as pessimistic as you possibly can. So assume that you'll not be paid on time, assume that things are going to cost more, and remember that you need to pay the tax. So make sure all those things are put in place. So that's a very quick, I'm not sure how quick, but as quick as I possibly could make it, a cash flow management summary. Mark, what about in terms of getting the terms and conditions right and the negotiation of these terms? What do you reckon?
Yeah, thanks, Alan. Really good points there. And I always say to clients that cash flow management and optimizing your cash flow really is a kind of holistic approach. You can, do all the legal stuff, but you also need to be hot on the accounts as well. It's a sort of two-pronged approach there, and also make sure that your business systems are good. Before I jump into my take on that, just wanted to acknowledge we've had a couple of questions in. So the first one is from M. Ramji, who poses the question, does business and cash flow trump humanity? And I know that particularly with Alan's beard, we do look like Greek philosophers occasionally, but that is quite a big question. So I think if you could elaborate a little bit and sort of focus in on exactly what you mean by that, and we might be able to give you a decent answer other than a sort of very general philosophical one. And Mark O'Neill, Alan, how do you keep your head so shiny and smooth? Moisturizer, question mark? This is a real question. I'm not making these up.
I seen that one coming in there, and I thought I did kind of hope that you were going to gloss over it, but never mind.
No pun intended.
No, you're right. A question all the way from Germany, I believe, Mark. I think Mark's based in Germany. It's not really as shiny as it looks. It's just I've got an overhead light, but I shaved every morning and moisturised immediately after it. That's how you keep it so shiny.
There you go, Mark. I hope that helps. And looking at your
much more diplomatic response than I was expecting.
yes. I did expect something else there, but that's a very informative response there. And it looks like, Mark, from your picture, you've also got a nice, I don't want to offend you here, but you look like you've got a nice shiny-ish head as well. So that's good.
Aye, I mean, I did wonder about people in glass houses throwing stones and what have you, but I didn't want to get into biblical quotes when we've already got philosophical issues to handle.
And Ian Hewitt has said Ron Seal, so that's another good tip if anyone's wondering how to keep the head shiny. So on to more legal things. So there's a lot I can cover here, and I probably will touch on quite a lot because it's something that I get a lot of clients coming to me asking about optimizing the cash flow from a legal perspective. And, I just get a lot of people pulling their hair out saying, I'm getting so many people paying late. How can I deal with this? And typically my answer is there's a few approaches, but obviously, making sure you vet your customer early on, making sure you've got really strong T's and C's and that they actually sign them, and having good business practices with regards to chasing payment quickly and making sure you get the money in. And so having good credit control as well. And then on the other side, in terms of, paying your suppliers and so on, It's about also having the right terms with them. So I'll just touch on a few of those areas in more detail. So in terms of getting to know your customers, there's various things you could do to research them before you commit to a big contract, for instance. So, you know, do you know them already? Do they come from your own network? Do they seem professional? How long have they been established? You can have a look at the website. You can go into Companies House, check out who's behind the business. You can also go and check the register of judgments to see if they've had any CCJs, which might suggest that they're not great at paying on time or managing finances. And so there's a lot of things you can do to kind of get a feel for the customer before you start engaging with them. In terms of, you know, other things you can do before you sort of commit, if you feel like, if it's a company and you feel like they're a little bit more risky, then you may also want to get separate guarantees. So you could get a personal guarantee from the director or directors of the company. And you could maybe also get, if they're a part of a group, a parent company guarantee. So that way you've kind of not put all your eggs in one basket. And if you do need to enforce payment, then you've got more options available to you. And then coming on to your standard terms of business, this is an area where you can, you know, make them really strong. And I would say that obviously the best position is for you to get all payment up front. That is the ideal scenario. You don't have to worry about chasing anyone for payment then, and you're covered. And if you can't get it all up front, maybe consider getting a substantial portion up front, you know, a large deposit, for instance. And if you can't, then making sure that your T's and C's are pretty robust will be a good step in the right direction. So what you need to think about is making sure that you've got stating what the price is really clearly, setting out the payment terms really, really clearly as well. When do they pay? You know, if it's installments, exactly when they have to pay each installment and how much, and, you know, whether VAT's included or excluded. And then also make sure it's very clear what you're delivering, because a lot of the time what I see is one of the main reasons for non-payment is mismatched expectations on what's going to be delivered. And people say, oh, you haven't delivered exactly what you said you were going to deliver, so I'm just not going to pay you. And then, of course, you can look at clauses like interest. So that's a good incentive for your customers to pay on time. You can include a clause that says if you don't pay on time, you'll have to pay a certain percentage of interest, you know, every day beyond that. So that can incentivize them to actually pay on time to avoid paying the interest. You can have a couple of other clauses. So if you're providing services over a long duration, you could include a term that says that if you don't pay us on time when we submit an invoice, we will stop work. Now, a lot of businesses think that you can automatically do that, but if your contract says that, you know, you will do something, unfortunately, you have to do it most of the time. So you need to include a specific clause that says, if you don't pay, we will suspend any further work. And you can do that, and that's legitimate. You just have to make sure you include it in the right way. And if you're supplying goods, a really good weapon is something called the retention of title clause. And it sounds fancier than it is. So title just means who owns the goods, and retention just means you're keeping it. So effectively, even though you're supplying goods physically, you basically remain the owner of them until the customer is paid in full. And so if you supply goods and they don't pay within the time limit that you set, then you can actually go out to their premises, in theory, and collect the goods that they haven't paid for and whip them back. So that is a really good weapon for people supplying goods as well. Now, obviously, making sure you get those terms, what we call incorporated, is important. Incorporated just means that that the terms that you set are actually then built into the contract, so you can rely on them. And the best way to do that is to get a signature, a hard copy signature. But obviously, in the digital age now, that's not always viable. So there was a working group consultation very recently, which found that digital signatures are okay, and they're valid, and they're legally binding. So it's just a matter of making sure you get something that's pretty clear to say that your customer is happy to be bound by your terms. And so you could have a digital signature, you could have a click wrap agreement where you have to click a button to say, I accept the terms. And there's various other digital ways that you can do it, but it's just about making sure your systems have a good audit trail to show that the customer did read the terms and has accepted them unambiguously. And in terms of your systems internally, obviously you need to think about making sure that once payment's due, someone chases it, and that, you know, credit control is really, really tight on following up on things. A couple of other things you can do that that I've worked with clients on is you can do invoice factoring, which Alan will probably know about as well, where you can basically get a company that will pay you a huge chunk of the invoice up front, and then they will be responsible for collecting the rest of that invoice from the customer. And then if and when they do, you will get it less their fee. And if you've got particularly risky customers or a really big project that's worth a lot and you're nervous about getting paid on time, you could always consider trade credit insurance or something like that. So there's lots of different things you can do. I think I've probably waffled on a bit too long now, so I'll pass back. But yeah, there are lots of things you can do, and it's about taking a holistic approach and considering it from all angles, really.
Comprehensive. Impressive.
Thank you.
Well, Alan cops up alone. And hi, Nick. Just spotted that Nick's jumped on. Nice to see you there. I'm assuming you're not complimenting my beer. Question for you, Mark, off the back of that, actually, on digital signatures, because this mills around in my head sometimes. Is there any real difference in the strength of, because some companies obviously get you to do a squiggle that looks like your signature. Some you've just literally got a stamp saying it went to your email address, and someone at your email address has clicked that they've accepted it, which feels a little bit wishy-washy to me. But is that fine?
So the working, I mean, I don't have it in front of me, so I can't quote what the conclusion was. But broadly speaking, there was really the key is showing that the customer has read them and understands them and is agreeing to be bound by them. So it's really an evidential point. You can and the more evidence you have, the better. So if you had, for instance, a digital squiggle is good because a lot of these can have metadata attached to them. So, and the metadata then is evidence that you can look at to say, at this point in time, somebody put this squiggle on, and therefore, you know, they'd read and they agreed to be bound by it. You know, so it's kind of a sliding scale, I think, is the best way of putting it. You know, all the way from someone saying, yeah, cheers, they look good, without putting anything in writing, all the way through to having the actual signature on a hard copy document. And the digital stuff kind of slides between. So, you know, you've got someone responding by email saying, these look good, go ahead. There was a case in Canada, actually, I think it was late last year, where someone had put a thumbs up emoji in a WhatsApp, and that was held to be a binding agreement. So, you know, just be careful what you're putting in your WhatsApp.
Is there an emoji for?
yeah, there probably is, and I think the Canadian court possibly went a little bit far on that one to open the floodgates to emojis. But we'll see. You know, the digital world is expanding every day, and we're going to have to find ways to deal with that legally. And so this is why the working group was set up, to kind of look at it and say, are we equipped to deal with this under English law? And the conclusion was we are, and we can have digital binding contracts. It's just a matter of evidence, really.
Yeah. Good stuff. Excellent. Cheers, Mark.
No worries.
One thing I would just add, Mark mentioned invoice factoring, invoice finance, factoring, a lot of different names for it. And it is good, and it does work in many situations. A couple of issues that you want to think about is, one, the costs per invoice, so it can take a fair bit of your margin. So you need to be careful if your margins are quite skinny anyway. So this is, again, as we all know, my clients generally tend to be service providers, so they should have a better margin than product providers. But if your margins are quite thin, that's going to take a big chunk out your margin. So you just need to make sure that you can actually afford to pay it on a from a profitability basis. The other thing that can be a potential problem is it called clawback or recourse or something along those lines, whereas if your invoice factor will pay your invoice, so you maybe get 80% of the invoice paid up front. If the client then doesn't pay the factor, then or delays payment or what have you, then the factor will pull that back off you. So it's all very well, but again, it's dependent on your customers paying basically it's dependent on your customers doing what they're supposed to do. So again, it goes back to what we discussed in terms of getting the invoicing correct and so on and so forth, because if they can say, if you invoice wrongly and then the factor sends their invoice saying, please pay this, they would then go to the factor and say, nope, I'm not paying this because the invoice is wrong. The factor would then say, right, I'll have that 80% back, and you're back at square one. So again, there's a lot of best practice aspects that need to be applied, whether you're self-financing or whether you're factoring or invoice financing. So just bear that in mind.
Yeah, that's a good point, Alan. And that's why I think it's really important to, if you're going to go down the route of invoice factoring, to think carefully about what projects it's suitable for, if any, and then make sure you're checking your terms and conditions with the, as you said, the factorer, the invoice factoring company, because that will be important if there is clawback or something like that. And it just goes to, again, back to the point that I was saying, there isn't a silver bullet here that's going to make sure you're going to get paid on time, unless you get paid up front every single time before you do anything. And so, you can't just say, okay, I'm going to get a load of crap clients who may or may not pay, but I'll just get this invoice factoring company to take the risk, because that won't be appropriate. It's about looking at the whole picture.
Mm-hmm. And anybody that's a fan of The Sopranos will be familiar with what's called the long fraud, whereas and I'm not suggesting that you've got clients that will do this, but there's a kind of similar situation, whereas the long fraud is that basically you set up and establish a good credit rating by paying a couple of small invoices at the start of a relationship quite quickly, and then slowly increase the credit that you're getting from a supplier, and then in the long fraud, basically you build up as much credit as possible and then stop paying, disappear with the goods and sell them. But a kind of adaptation of that that's probably more commonplace and obviously legal is that people will build up a credit history with you and pay you up front or pay you regularly, and then say, listen, your credit history has been great, so we've paid you up front the last couple of invoices, can we now extend our credit? And then you find yourself, there's a bit of credit creep, if you like, and you find that you're paying, while you were getting paid earlier, you're then getting paid later and later and later, which becomes a problem. So you've got to watch that as well, because while I'm not suggesting that they're doing it on purpose so that they can not pay you at all, it does mean that they're then using you as their kind of finance probably for other aspects of their business. They'll be paying their salaries rather than paying your wages or paying your bill, sort of thing. So keep an eye on that. And a lot of the time we're fairly more relaxed with people that we've dealt with for a longer term, So there's a tendency to build up a wee bit of trust, which might be misplaced. It might not be misplaced, but it's something that you need to keep in mind. I think that's why a lot of the time you're best having somebody that's no directly involved in the business as an owner. So me, for example, I shouldn't take care of my own credit control, because I would have a client come on to me and say, things are not too great this week, any chance we can extend this for a couple of weeks, and then that goes out to another couple of weeks and what have you. Because I would invariably say yes, but whereas if you get somebody else involved, they'll invariably say no, pay them, So that's something that if you're going to set up a robust credit control system or a cash management system, you want to be looking at having somebody that's going to be not quite a bulldog, but you know what I mean. They're going to be tenacious about it, and they're not going to let the client get away. Because bear in mind, this client or this customer or what have you, if they're not paying you on time, the chances are they're not paying anybody on time, or they're paying other people. They're not paying other people on time. So it's the kind of squeaky wheel gets the grease principle. You make more noise, they'll maybe pay you to tell you to basically shut you up, sort of thing. You know, so it's something worth touching on. And you should also, sorry, I'm waffling, but you should also talk about, in terms of your systems and getting paid, if you've got the right financial bookkeeping system in place, these reminders and what have you should happen automatically. And it might not be a bad idea to send a reminder before it's due as well. So rather than wait until it becomes overdue, a couple of days before your bill's due to be paid, doesn't do you any harm to drop a quick email or what have you, just saying, just a reminder that your payment is coming due on Friday or what have you. It might not make any difference, but it's not going to do you any harm.
It's a big old topic, this one, isn't it?
Seems to be, aye.
I can't see the comments loading. Mark, you managed to see a few questions that I couldn't see on the side here. Have you spotted anything else that's come through?
I'm just having a look now. Oh, 1 second. Yep, I'm just having a look. I think the latest Ramji has added that the problem is if they haven't paid you or renege, then they just lawyer up on you and increase costs and abscond. That is the problem. Yeah, I mean, and I think obviously we've just touched on a few points there that will minimise the risk of that happening. And of course, no one really wants to instruct lawyers, let's be honest. So, you know, the idea is to get this all dealt with up front so that you're not in a position where you both have to increase costs, time, stress, etc., by both getting lawyers to have a battle over who should have paid and when and how much interest has been added. And, you know, it can be an absolute pain. So the idea is to get a proactive system to manage this so you don't have to get into that position. Any others? And then Ranji has also put a series of, I think, about 21 emojis. We've got a thumbs up, 2 ticks, a $sign, a credit card,
nice,
and a melon. So I don't think that's a question we need to respond to. And then he's just said SLAs, service level agreements. Yeah, that's that. I mean, I'm not sure what your question is, but if that can be a good way of making sure that, you know, you've got things, you've got processes and procedures in place. But again, I don't think that alone would be, you know, sufficient to cover the risk.
It could also, I'm not suggesting that you shouldn't have service level agreements. It's something that's important to us. But in terms of cash flow, I suppose it could also introduce a level of ambiguity that you might want to avoid, because arguments could be made that you're withholding. A client's argument could be made that you're withholding your fee because you've not met the SLA, and then it becomes a whole big argument about that side of things, you know. Absolutely,
and you know, there might be a sort of minor deviation from one of the SLA points, and the client, as you said, Alan, just says, "I'm sorry, I'm not paying you anything now." You know, correct. So if you have, you know, especially if you have some overly complicated, lengthy SLA procedure, it could just open the door to lots of arguments over whether you have satisfied your service obligations. Let's have a look, just refresh if there's anything else on here.
Yeah, Mark O'Neill's, I'm not even going to answer that one this time, Mark. I mean, I answered the question about my shiny head, but I'm not answering about how I look so good. I mean, it's just genetics, buddy. That's all it is. It's genetics and the Scottish diet.
Yeah, genetics and hobnobs.
Yeah.
Chocolate hobnobs and square sausage.
What is the Scottish diet, Alan? Out of curiosity.
I think, well, I mean, chips are popular. Actually, it's not. I mean, we've got a lot of great restaurants and stuff in Scotland. I mean, we used to be the kind of laughing stock of, well, Britain used to be the laughing stock of Europe in terms of their food, and Scotland used to be the kind of laughing stock of Britain, I guess. But we're quickly catching up. I mean, salad's quite popular these days, although what we call a salad is cold chips the next day. But
I think you might have to
fried.
There's a couple of cracking things. I mean,
you have to explain what Corvus is for me, Alan, because I feel like this is beyond my. Thanks, Heather. Heather Palmer's just said Corvus, Alan. That
Heather,
is another word to me.
Heather's food. She stays in Ascot, I think it is now, Heather. But she's for the same town as me, Bowness, and it's not Corvus, it's Corvy's, and it's a chip shop.
Sorry,
and it's one of the finest chip shops in the country, really. You know.
Yeah. Corby's. I feel like I've gone into a French restaurant and asked for escargot. I'll work on my pronunciation. Have we got any more lined up? I've got one extra question that someone asked me yesterday, actually. Have either of you guys got anything else in the tank?
Nothing here.
No,
So,
anything here.
The question I got asked yesterday, which may have some relevance to cash flow, maybe, was met a lady who runs an HR consultancy, so outsourced HR, so I guess service business. And she's at a point where they've been growing, and she now sees a lot of her time caught up doing things that really she doesn't want to be doing. She wants to be out growing the business, selling effectively. But they're a bit apprehensive about how you know financially when you're ready to take on a new staff member and taking that jump, because it's a big leap, isn't it?
Aye. It's a difficult one. I mean, sorry. That really is a difficult one. It's a judgment situation, because you're going to have two problems. You're either going to have capacity issues or you're going to have income issues. Somewhere in the middle is the sweet spot that you try to hit. You'd like to think, and I mean, I don't want to make any assumptions about your client's business, but you would like to hope that there's enough cash in reserve that they can pay a new employee for a couple of months, let's say, to see if they can change if they can move the needle a wee bit and start to produce for the business. But I think the real answer is you probably just got to try and see. You know, I mean, you can't say, because none of us have got a crystal ball and we can't see how this person's going to impact in the business. You can make certain assumptions and you could say that they've got to hit certain milestones and targets and so on and so forth. But milestones and targets, by their nature, aren't guaranteed. You know, so where do you make the assumption? The assumption is that they may hit those targets or they may get close to those targets, but you can't know that until they actually get there. So I don't know, is it a bottle thing? It's difficult. We always find that, or I've certainly found in my experience, and clients have probably found the same, that if you think you need a new employee, then you need a new employee. Yeah. And then once that new employee is in, it kind of focuses the mind that you go out and get the business in, so that they're not sitting twiddling their thumbs for 40, 50, 60, 70% of their time. So, and it also frees you up to do that. So in terms of like a kind of growth strategy, it's sometimes better to have the employee in place and then go and get the business, rather than get the business and then find the employee. difficult balancing act, but reputationally, you're better having somebody there so that the business keeps getting fulfilled, the obligations keep getting fulfilled. But obviously, cash flow wise, that has a negative effect. The flip side of that is you keep the cash flow strong by not employing somebody, but service levels will possibly start to dwindle, you know. So
yeah, probably got a disgruntled team on your hands as well, because you're working them like blue arse flies as well.
correct.
Yeah, and that's you're absolutely right. It is a judgment call. They have to sit down and think about if it's the right time to bring in more people. But it doesn't have to be. I suppose it's not a sort of black and white thing. There are kind of an in-between approach might be to get someone in temporarily as a temporary worker, for instance, or you could do a small fixed term contract to see how things go. So rather than jumping straight to a full-time employee, and just to kind of summarize the position, the way I explain it to clients is that you've got employee up here, which is they've got a lot of rights, and there's a lot of regulation that you then need to comply with, the Employment Rights Act and so on. So you need to think about that when you're bringing an employee in. The next level down is kind of worker, which is they've got less rights than an employee, but they've got more rights than someone who's self-employed. And at the bottom of the chain, you've got truly self-employed people, like freelancers and whatnot. So it's kind of thinking about where in that sort of scale you're going to need something. And you could even, rather than taking a full-time employee on, if you're nervous about the cost of it, you could always see if getting someone in on a project-by-project basis, when there is peak times, for instance, on a freelance basis, might be a good solution, and then working it from there.
Right, guys, well, I think we are just about at 45 minutes.
Sorry, Chris, but remember, freelancers are humans too, so they need to be treated with the requisite respect, and they need to be paid on time and paid properly. Especially if they've come in, and to use one of my favourite phrases, if they've come in to put out a Spitfire. Once a Spitfire's out, I appreciate that they're no longer important to you, but they've fulfilled the need. So don't take the piss. Pay your suppliers, contractors, subcontractors, freelancers, whatever you want to call them. Pay them when they need to be paid. That's important.
Absolutely, because at the end of the day, their business, amen, yeah, their businesses as well, and they'll be thinking about all the same things that we've just talked about now, about managing their cash flow.
Correct. Which I guess comes back to M. Ramsey's question about the morality, I suppose,
Yeah, good tie-in, exactly.
Yeah, it's a quote of famous Beard as well. Don't be a dick, eh? Everyone's got families to feed. So, right, we're at 45 minutes now. I think we're pretty much, that's time for this week. I know it only says 43 minutes on the clock, but we've got two big aims over the next couple of weeks. We'd like to have a themed episode. So if there's any particular topic anyone really want to hear a bit more out, that we could spend a bit of time getting into the weeds into, maybe even get a guest on in that area, please suggest, either send a message to one of us, or, well, I'm sticking in the comments because I think they disappear after the show. So send one of us a message. And the other big thing that we're going to try and achieve next week is our beloved lawyer is going to turn up in the green room about 15 minutes before the show next week, so that we're not going live 2 minutes late.
I'm glad you're confident about that, Chris.
It's non-negotiable, Mark. Don't worry. And I think that's it. So thanks very much for everyone who's tuned in, and cheerio from all of us, and hopefully see you next week.
Excellent. Thanks, guys.
Cheers, guys.
Bye.